Good morning. This is my morning brief video. If anybody's been up with me tonight, uh, I've been having darndest time sleeping. Don't worry, I slept most of the yesterday afternoon and late last night, so I'm going on 14 hours sleep, so I should be good for the day. But at any rate, I was posting charts on Twitter this morning, right as we tagged our moving average here. That's our uh, uh, 200 on the 2 hour here. As soon as we tagged that, I started alerting. I started posting charts that we may have just hit a major top on this swing high, and so far that is proving to be the case. Just heads up on that. So bottom line is, I like using pivot points, and then I also like using moving averages. The power of the moving averages over the pivot points, and I'll just switch over real quick to my other chart here on the ES is down here. Okay, right here's our moving averages. See, we were opening March coming in today right above our March pivot. And in my opinion, what they tend to do, I've been watching these moving averages enough on a weekly or a monthly time frame. If you're opening right above the weekly pivot, like on a Monday, or right above the monthly pivot, which today is March 1st, typically that is a bull trap historically. Okay, guys, and that was what I was seeing this morning early on. So that's why I went down to my moving averages. And thing is about your pivots, that is a place where high volume, that is pivots are built out by high volume areas. Okay, that's why you don't want to target your pivot points as extreme highs or extreme lows. That is a place where volume has been readily accepted. The pivot points are a reference point of the above and below your monthly pivots. It's going to really change the way the algos interact with prices in the markets. And I personally think we are going to early on here on March 1st break our monthly pivot today. So heads up on that. That is what I'm. That's an idea I'm floating out there, and I'm sticking with it. I think this was a bull trap going into to start March 1st. So they brought us up just enough to make it look like that everything was a-okay to start March, and I think we're going to find out real quick that it was a big trap. Okay. Okay, so it's my belief that this is a bull trap, and if I'm right, we're probably going to close down here around 4,300 today on the markets. So be aware of that scenario. We are below the European Open as we speak right now. The German bonds are showing a flattening yield curve this morning. Both the 10-year and the 2-year, the bonds are down. The yields are down this morning, so be aware of that. So just heads up going into today's session. So what's important about the German yields, and especially the yield curve and how yields in Germany are working? If you start seeing yields down in Germany, and especially when they get really crushed on the long end of the curve, that is a full-on risk-off scenario, and that's what we're seeing this morning. So be aware of that. The long end of the curve is really getting crushed this morning. So heads up going into today's session. That confirms my thesis that we might be here on the 2 hour rejecting that 200-day moving average and possibly going to be going all the way back down. Even here on the ES is possibly all the way down to the below 14,000 today. 13,900. We have a potential 13,900 today. I don't see that. I mean, that would be a dramatic sell off. So, but 14,000 seems possible today in today's session. So that's my theory. I'm sticking to it. And we had the similar situation on the NQ chart here. So basically, we right now are already, so we've seen some relative weakness on the Dow Jones and the NASDAQ. Those two things have really been acting the weakest in this correction. And we're right here right now trying to cross to the bearish side of our quarter pivot, and we haven't even opened the session yet for the month. Just float that idea as you go further in today's trading session, okay, guys? I'll just start with this one first here. Russell. We do have a lot of Fed speak today. The inflation problem, if nothing else, has gotten worse. Uh, the markets are trying to price in a 25% basic point cut. Honest to God, given the current geopolitical everything going on with geopolitics, I can personally do not see them at the very least not doing 50 basis points, even though the markets are saying they're only doing 25. So I firmly think the markets are not expecting, they're starting to not price in the full impact of a 50 basis point thing. Because we saw they raised it to 20% in Russia because of the problems they got going on there. And that inflation is getting reverberate. It's back in crude oil prices here in the States. So, it's just inflation everywhere. And the whole inflation theme, if nothing else, is getting ignited. And it's causing a major problem for the Fed. Okay, guys. So if you hear these guys talking about only a 25% basis points, I'm calling bullshit on that. Okay, so heads up on that going forward here. Okay, and then as far as your pivot view goes on the Russell here, uh, we are well above our quarter pivot at this point. Uh, but remember, the Russell's coming off of a much lower base. Okay, so basically, this is the 2020 close. So we're fighting with the 2020 close here on the Russell. Just heads up, keep that in context, okay? Not 2021, 2020 close. We're starting March right there, okay? So heads up on it. It looks like we might be losing that right out of the gate, March 1st here. Heads up. This falls right in line with that bull trap scenario that I'm seeing here. So heads up, what I'm seeing in this market, okay? And then I'll finish off here with the YM. That's your Dow Jones. It's been acting the weakest here lately. So because I have um, and then here on the 1 hour chart with my pivots, which time frame doesn't matter when you're using the pivots. Uh, so basically, we have broken on the Dow. We have already broken well below the quarter pivot here, or the monthly pivot. The blue line is your monthly pivot, and then the white line is your quarter pivot. So we're fighting between our quarter pivot and our monthly pivot. Really dangerous little area here to be in. So, definitely keep that on watch here on the Dow Jones. Uh, this one here, I'd much rather be short tech into today instead of Dow because we are fighting this quarter pivot area. Not really the best place you want to be placing your bets to the short side if you come in today. Who knows? By the time the market opens, maybe I'm wrong and they save everything. We go rocket ship higher, but I still think it was a bull trap. They closed out the month with a bull trap. Okay, another tail that I always try to watch here. That's your VX futures. So we are trying to cross above our weekly pivot right here, right now, early on in the, March 1st. Like I said, it's the very first day of the month, so I don't know for sure what's going to happen here, but we are trying to go bullish on our weekly, using our weekly pivots here on the volatility futures. So, and when this is an extremely heightened situation just to start our month to begin with. So, do want to point that out. We're above our quarter, above our monthly, and we are starting the month of March above our weekly. A lot of little things not lining up very good to start the month. So, quick rundown for the morning action here, morning brief here. Lucid took it on the chin on their earnings. Probably gonna bring Tesla down today too. Seeing Lucid coming off, that's a EV play. Okay, get further downside on RSX. Okay, that's your Russia ETF. Okay, then put that on there. Neo, that's another one of your energy plays, your EV plays. It's falling in sympathy with the Lucid. Okay, I'm not really sure what XPEV. I think XPEV is an EV too. So you guys can please leave a comment below if I'm right. I think XPEV is another one of those EV automotive plays. I could be wrong about that. Please leave a comment below my video and let me know on that. Soxel, that's this is your 3 times bear on your 3 times bull, 3 times bull on your semiconductors, and it's getting quite active this morning. So we got some volume coming into that this morning. Your in 3 times short Qs is got quite a bit of 3 times long Qs got quite a bit of volume this morning. TQQ, that's your long Qs. SPY's down 0.4%. USO is rocking here. Give me 1 second here, and I will show you the chart on the crude in relation to the pivots here. And slash CL. As you can see, crude is on a tear here, guys. We are heading into the next pivot level. That's the $99 range. It's looking, given the geopolitical climate, I think we're going to stay up here today. So this heads up on that. What they did globally, they unleashed a coordinated around the world, all the countries. They released some of the reserves to release some of the short-term pressure of what's going on in the crude oil space, and that's why this thing just hasn't. That's why this thing hasn't just taken off to the moon, because of that, and that's a short-term fix. So that's probably only like a week or two. So just be aware of that. That is a, you know, barely fixing anything. Okay. And to finish my video off, this is my wild card for my bearish sentiment coming into today's uh, action. We might just have a really tight inside day again. In regards to the fact that I do think with all the Fed news coming out this week, we got all kinds of news coming out. So I am going to possibly make a bullish case that we are going to be coming up to the 208 area here on the IWM as banks possibly catch a bid. Maybe not today, but here in the not so distant future. So I just want to float that idea just in case that happens. But like I said, initially, we are rejecting the Bollinger Band to start the month. So this one here we ought to definitely watch. I think this is the most important chart to watch and see how prices react as the markets open today. So be aware of that. Okay, some other things I do want to point out. Everybody knows I use the TikTok scanners for basically if I come into the market, which direction should I be on? Which direction should I be trading? And everything's bearish today, so this tells me that I should be naturally bearish minded going into today's session. Okay, and then let's see here. Give me a second here. Let me see what else I can get off my scans here. Another thing to worry about this morning. Okay, I told you what was going on with the German bonds. Look what's happening to the U.S. bonds. Bonds are rallying, so that means yields are getting crushed. Okay, this is the 10-year, the ZNs or the 10-year here. We're coming into my critical trend change line. So we have a bid in the bonds between all the economic data hitting this week, plus the geopolitical factors. You know, the fact that Russia had to raise their currency to 20%, or their rates to 20% to help stabilize their economy, which it's a whole different, it's completely nuts. But the inflation is being passed around the world, so all these central banks, to deal with what's going on in Russia are going to be forced to move rates much higher, much faster than what they otherwise would have wanted. Okay, guys, and it just screams stagflation around the planet, the current situation we're in. Okay, and the markets just have not completely digested the reality of what's going on. Okay, I do want to float that idea, but yeah, this is not good for the banks, in general. So be aware of that. What we're doing here at the bonds, we are potentially doing a major trend breakout change here. We're going to be at the very least back testing it today, if not setting up for a breakout later on this week. And then to finish some things out here on my IV, some things that are seeing some major IV moves today. Remember, Budweiser sells a lot of alcohol to the Russian markets, so be aware of that. Russians love their alcohol, so that's probably why I don't know what the news is, but might have something to do with it. Deutsche Bank, because I told you about those German yields, they were getting crushed, and so that's not good for these German banks at all. So it's one of the leaders right here in my scans right here this morning, along with financials. That's your FAS, XLF, taken under the chin. So we're really having some bond disruptions this morning that is not constructive for risk on appetite in this market. So everything I'm seeing here, you do not want to be taking this market long. I mean, unless something drastically changes. You got Goldman Sachs down, you got Citigroup down. I mean, definitely, uh, Goldman Sachs trading down early here. Citi's really getting destroyed here. Wow. So BP is probably going to have to take a much greater down move with what the type of write-off that they're having to do with Russia is significant. Okay, guys. So yeah, this one here is probably going to have to come down considerably more after what's going on with they're just completely walking away from a major deal they had with Russia. So you talk about some major you know what Russia's doing here has destroyed partnerships that have been building for 20 years, and we're probably looking at another 20 years to try to repair some of the damage, and it's probably not going to happen until we get another leader into Russia. So I do want to point that out. I'm really surprised the Ukrainians are still holding out, to be honest, under the what's going on in Russia right now. But so that's basically some of the things I got going on here. Basically, the bonds are destroying the risk on appetite, in my opinion. And like I said, we're well below. If you come over here, and I'll give you one last look at my book maps real quick. And as you guys can see here, to finish it off right here, uh, right up here, that was your European Open on the ESs here, and that's we're trading down here. Okay, so heads up on that, what we're going on here, and so basically we had support. This was our first main line of support in the morning session. They've taken that out, and we're trading below that now. So that's pretty much what's going on, what I'm seeing in the markets at this point, and we will see what happens as the markets open. So thanks for watching my videos. Please retweet them on Twitter if you get a chance. A bunch of you guys are following me on Twitter now, so there's no reason for you not to retweet me. Like the videos. I really appreciate it, and I love seeing good comments at the bottom. That way everybody else can see your ideas and your thoughts about the videos and stuff. So really appreciate everything you guys do to help support me. Even on the direct message, I really appreciate all the direct messages and everything. So thanks a lot, guys, and we will load up to the bear. And I'm only doing puts today. I just don't know what those puts are going to be. So we'll see what happens.